Greetings. Welcome to GDIC's webinar for the OASIS Phase II, Human Capital Services domain. This webinar covers both small business and unrestricted tracks for the Human Capital Services domain. My name is Cal, an AI assistant, and I am your host today. With me is Ab Vand, VP for Capture at GDIC and a subject matter expert on self-scoring proposals. Ab will guide you through today's deep dive into the OASIS Phase II Human Capital Services domain opportunity. Ab has over 30 years of experience in capture and proposal management. He is considered an expert in self-scoring as well as traditional proposal and capture efforts. Ab has managed over 1,000 successful capture and proposal efforts, including over 200 successful self-scoring proposals such as OASIS+. He has also held numerous training webinars for various APMP chapters and Apex offices throughout the US. So a few housekeeping notes. First, the link to the recording of the webinar will be sent to you within 24 hours. Second, we will hold a Q&A session at the end. You can send your questions during the webinar by the chat system to the right of your window and Ab will address them at the end. Third, you can download this presentation by clicking on the link under File on the right-hand side panel on your window. We highly recommend you download the slide deck so that you can always refer back to it. So let's see what this webinar covers. We will first give a quick intro to GDI Consulting Services. Then start with giving the general information on OASIS+. Next we will have a thorough discussion of the scope of the Human Capital Services domain. From there, we will deep dive into the scoring system and discuss score optimization as well. Ab will also touch on how you prepare the actual proposal, or what we call substantiation. The importance of compliance and factors such as pricing and partnering are also covered. Lastly, Ab will provide some strategy recommendations and experience sharing and then finish with the Q&A session. So with that, I will now hand over the control to Ab to start the webinar. Ab.
Hello everyone, and thank you, Cal. As Cal mentioned, we highly recommend that you download the slide deck to refer back to it. Due to limited time we have, I might skip some content, but I wanted to have a full slide deck prepared for you so that you can always refer back to it for full explanations. Also note that we are holding separate webinars for all the 13 domains under OASIS+, and I will post the link to the webinar schedule page on our website in case you want to participate in other domain-specific webinars as well. But note that in each webinar, some of the information is similar. I just don't want you to, see repeat stuff. But when we dive into the scoring system of that particular, domain, that's where the differences arise. Also, for those of you who are unsure if you should go after this opportunity at all, and whether you have the minimum requirements or not, we have a pre-qualification assessment service for just $490, and we assess your contracts and tell you your chances and gaps so that you can be sure of your eligibility with minimal cost. I will put the link to that page on the chat as well. Okay, let's start now. Let me very quickly give you a short intro to our company and then dive into OASIS+. So GDI Consulting has been in business for over 15 years, and we have established ourselves as the premier self-scoring experts in the market. This is not a boast. Just see those numbers, including the fact that we prepared 97 successful proposals for our clients in OASIS+, the initial bidding. So 97 awards we got. That speaks by itself. We have over 650 satisfied repeat clients, 86 of whom are very large businesses, some on the top 10 list of largest defense contractors. You can later refer to this page for more information on our company because we're short of time, so I'll skip the rest of this stuff. Now, I won't go into the details of our services as most of you are repeat webinar viewers, and will just suffice to say that we have 4 main lines of service, including proposal development, capture management, specific support services like competitive intel or price to win, and finally customized training. So we strive to be a one-stop shop for federal and SLED BD needs of small and large companies. Okay, let's start with the OASIS Plus then, and get some general info about it. We call it OASIS Plus 101. So it's good to take a look at the previous OASIS contract, which ran from 2015 to 2025. These years are approximations, as there were different pools awarded at different times. So this is the graph showing the government's spending on this contract during its course of performance. And you can see that towards its end, the government was spending about $10 to $12 billion per year on this contract. Blue is the unrestricted contracts spendings, and orange is the small business contracts spending. Okay, and in terms of the top 10 agencies using OASIS, obviously GSA has been the main user, but since these numbers are all in the billions of dollars, don't underestimate the other agencies involved. More than 30 agencies have been buying services through this contract. Okay, so let's now look at OASIS Plus. That was OASIS, the previous contract. Let's now look at OASIS Plus. So we have the general information. GSA is the contract owner. It's a multiple award IDIQ GWAC, government-wide acquisition contract, meaning that all federal agencies can actually put out task orders under this. It has an open ceiling, number of awards unlimited, and this phase 2 also unlimited as well. Contract duration is 5 years plus 1 additional 5 years. You can think of it as an overall 8 years now, because we are nearly 2 years into it, or less than 2 years actually. First round was awarded. Phase 2 has started January 12th, 2026, officially has started. And it's a rolling admission system, so there's no due date specific. Obviously, the sooner you can get on it, the better, because then you can participate in the task orders that are out there. Now, there are 6 tracks, as they're called. You can think of it as 6 different contracts. The contracts are segregated by the type of company. So there is a total small business contract or track, 8A small business, hub zone small business, STV OSB, WOSB, and unrestricted. So these are the 6 tracks that we have. Now, just so we have one vocabulary, from here on, when I discuss small business, when I say small business, I mean the first 5 tracks. So all these, the total small business, 8A, hub zones, STV, OSB, WOSB, from here on, when I say it's a small business, especially when we go into the scoring, meaning all these 5. So if you're in any of these, that's you. And then we have the unrestricted, or UNR for shorthand on that. Now, in terms of the numbers of the original OASIS Plus awards, you can see that 588 unrestricted, 1,375 total small business, STB OSB 345, WOSB 309, 8A 181, Hub Zone 131. The numbers might be a little bit more than these, because these are, I think, a couple of months old. They might have awarded a few here and there. But do remember that, first of all, there is no competition. So these numbers might double as far as the government is concerned. I mean, there's no competition for phase 2. And also don't forget that this doesn't mean that, for example, if you're going for STV OSB, you have 345 competitors. No. These are, separated into the domains. So we're going to have, these are about the 8 previous domains. 5 have been added for overall 13. So it's not that, these are the numbers of your competitors in each of these set aside economic, socioeconomic types. It also depends on the domain as well. Now, in terms of the domains, left-hand side, the orange domains, these are 8 of them. These were the original OASIS Plus. Now they've added 5 more on the right-hand side, the green ones. So technical and engineering, T&E, management and advisory, M&A, research and development, R&D, intelligence services, enterprise solutions, which is only for unrestricted track, facility services, logistics services, environmental services, and to the right, business. These are the new ones: business administration services, human capital services, financial services, marketing and digital outreach services, and finally, social services. So it nearly covers all types of services work except horizontal and vertical construction. Even construction trades are included in facility services domain. So even the trades are there, just the horizontal and vertical construction services are not there. Now, many call this non-IT services contract. That is a mistake. Out of the 97 clients that we helped win on this, 36 of them were IT companies. So depending on the type of IT work, many of them fall in the parallel to the type of work done under, for example, technical and engineering. The first one, first domain, research and development, third one, and intelligence services, and perhaps even in the new domains. So that is why many IT services companies can and should also go for this opportunity. So let's now dive into the main topic of today's webinar, which is the human capital and workforce services domain. The human capital domain includes services that cover all aspects of federal workforce and HR solutions, including recruitment, staffing, classification, and benefit support. It encompasses organizational development and training programs, and agencies use these services to improve performance, outreach, or internal operations. These are the types of task orders you will expect to see once you're awarded on this opportunity. I'm not going to read the whole list, but you can always refer back to it once you download the presentation slide deck. Now, the relevant NAICS codes for the human capital domain include the ones listed here. I will come back to this list when we discuss the scoring system for this domain. Just wanted you to see that these are the NAICS codes related. Now, if your firm supports capabilities in human capital area, this is your chance to gain a spot on OASIS Plus. From small business specialists to experienced incumbents, there's room for many participants. So who should participate? HR consulting firms with or without prior federal experience, obviously HR consulting firms. Training vendors offering federal focused curriculum or coaching. Consultants experienced in DEIA and workforce planning. Firms who worked under HCATS and want to transition. And I should mention one thing here: HCATS is not going to continue on. It's not going to be extended. So the next iteration will not exist. The next iteration is this domain, human capital domain in OASIS Plus. And transition is not automatic. You must submit a proposal towards OASIS Plus. So all those companies who are on HCATS, they must transition to OASIS Plus human capital domain if they want to continue on. Staffing providers familiar with USA jobs and federal hiring, organizational development specialists with past OPM work, workforce data analytics companies with HRIS integration, veteran-owned and other firms with experience in leadership training, SP firms with professional development capabilities, and JVs focused on talent modernization and HR transformation. These are some of the companies who might be interested to go after the human capital domain. Okay, so if you're good that we want to go after this domain, let's understand the scoring system. I'm assuming that you're familiar with the concept of self-scoring proposals. If not, please refer to our previous webinars on this subject on our website. There are many webinars that I held discussing how the self-scoring proposal system works. We just don't have the time to go for that now. This that you're seeing is the overall situation for the scoring system for human capital domain. So there are a maximum 50 points, whether it's a small business submission or unrestricted. And remember, when I say small business, from here on, I mean all the tracks, 5 different tracks: total small business, 8A hub zone, women-owned small business, and so on and so forth. So, and STV, OSV. So 50 is maximum. Now, if you're a small business submission, if you're above 36, that's the threshold. So you need to be above 36 to be awarded. If you're unrestricted large business, you need to be above 42. Now, what constitutes those points? I mean, how do you get those points? There are 3 main score factors: qualifying projects, or QPs, and I'm going to use these terms, QPs and FEPs, from here on. So qualifying projects, or QPs, federal experience projects, or FEPs, that's the second score factor. And third score factor is systems, clearances, and certifications. And you can see that it's the same for small business and unrestricted: 40 for qualifying projects, 5 for FEPs, federal experience projects, and 5 for systems and clearance and certifications. Now, each of these have their own sub-factors. I'm going to go into the details of those in the next slides. But I just wanted you to understand that there are 3 main factors: QPs, FEPs, and systems and certs. So the main key players are the first score factor, which is QP. Now, you're supposed to provide 5 projects. That's why they're called qualifying projects. 5 projects. So we need 5 QPs, and that's the key to winning on this proposal. You want to have those 5 QPs in place. So this is a graphical comparison of the 3 main score factors, from which you can see how important the QPs are compared with the other 2. That's why everything revolves around those 5 contracts that you're bringing to the table. And let me put your worries at rest right here. If you don't have 5 qualified contracts, you can always bring in partners and team members and use their contracts. This is allowed. So let's now dive into each of the 3 main score factors and see what sub-factors they have and how the scoring works for them. So let's start with the QP factor, the main one. So there are 5 sub-factors under QP: relevance, scale, integrated experience, management and staffing, and past performance. And I'm going to go into each of these and discuss the scoring for each of these. Remember, these are the sub-factors under QP. Now, here's a graphical representation of this. Here again, you can see that there's one sub-factor, which is the most important one, and that is relevance, which gives you 20 points. That is 4 points per contract. Remember, we were supposed to have 5 QPs, 5 contracts. 4 times 5 is 20. Now, blue is small business and orange is unrestricted. That's the color we will be using throughout this. So blue is small business submission, orange is unrestricted. Let's look at relevance in more detail now. So you can have up to 5 QPs or contracts, with each contract getting a maximum of 4 points. Contracts can be federal prime contracts, federal subcontracts, or commercial contracts. All of them are acceptable. For federal prime contracts, they can be standalone contracts or task orders under a multiple award IDIQ BPA, or a single award IDIQ BPA, or FSS, GSA MAS, or BOAs. Remember, I said task orders under multiple award IDIQs, not the IDIQ award itself. Task orders under them. Also, OTAs, other transaction authority contracts, are allowed, but grants and co-op agreements are not acceptable. So you can't use grants and co-ops. Obviously, contracts must be based on FAR Part 37 services, meaning that you can use contracts that you provided services either to the government or to your client, and not just supply of equipment and things like that. Now, there are 4 requirements for these 5 QPs that you need to adhere to. So first one is the minimum value, then that's annual value. So contracts must have an annual value of at least $500,000 for small business or $1 million for unrestricted. So how do you calculate the annual value? If it's an ongoing project, the total expected, meaning contractual value, is divided by the total expected, again contractual, whatever is written on your contract award, duration. Now you include all option years too to give you the annual value. So take an example of a contract that is $10 million for an expected duration of 5 years. For example, 1 year base, 4 years options. So the total is 5 years. You divide 10 million by 5, you get $2 million annual value. If your contract is completed, it's already finished, then the way you calculate the annual value is that the total obligated, the actual payment value, is divided by the actual total duration. So whatever the government actually paid you, divided by whatever duration it took. Maybe it was a 5-year contract, but you finished it in 4 years and it ended. Or it took 6 years. You take those real numbers and you calculate for completed projects. Now that was the first requirement. Second requirement is contract date. If the project is ongoing, it must have at least 6 months of completed performance as of January 12, 2026, meaning that it must have started before July 12th, 2025. If it's a completed contract, then the completion date must be within the past 5 years from January 12, 2026. Meaning go back 5 years. Within this period, it's allowed. Now, it doesn't matter when it started, maybe 20, 30 years ago, but the completion date must be within the past 5 years. Third requirement is past performance rating. You must have, the contract must have a past performance rating of above, and I'm underlining above, not equal to, satisfactory. And that's the average of all sub-factors. These factors and sub-factors come from CPARs, your CPARs of that contract. Or if the contract doesn't have a CPAR, there's a form that comes with the RFP called JP6, and you get that filled and signed by the contracting officer instead of CPARs. But at the end of the day, the average must be above satisfactory. Finally, the fourth and most important is relevance. Now, the contract must be relevant to the domain, either through auto-relevance NAICS, and for human capital, I'm going to list those NAICS on the next slide. Or I've seen many cases that people have contracts that don't have the necessary NAICS code, proper NAICS code, or you have a subcontract, or you have a contract which is commercial. Then you use a form called JP3, comes with the contract, with the RFP. You get it signed by the contracting officer or your prime, and you're good to go, and you can prove relevance that way as well. So this is the list of auto-relevant NAICS code. As long as your contract, the QP, has any of these, you're good to go. You don't have to prove anything else. And the size standard tells you whether, the average 5 years, if it's below that, your revenue, then you can submit as small business. But if you're above that, then you cannot submit as small business. And you can see these are the different NAICS codes that your contract can have. And as I said, if you don't have them, the NAICS code on your contract, but the scope does cover human capital services, then you have to get that JP3 form signed by the contracting officer. Okay, so that was relevance. Now let's look at the second subfactor, which is called scale. For each QP contract, you get a point if its annual value is greater than or equal to $1 million for small business, and $2.5 million for unrestricted. Or maybe the value is not that high, but the number of FTEs, full-time employees, is greater than or equal to 5 for small business, or and 12 for unrestricted. So either case, whether the value is above those numbers or the number of FTEs is above those numbers, equal or above, you get 1 point. Then you get an extra second point for each QP if the annual value is greater than or equal to $4 million for small business and $10 million for unrestricted. Or again, maybe the value is not high, but the number of FTEs is high. So if the number of FTEs is equal to or greater than 20 for small business or 50 for unrestricted, you get a second point. Note that the credit is provided for the total annual project value, not just a portion relevant to this domain. Okay, not the maybe the contract scope covered human capital domain, but also other types of work. They don't care as long as the total value of the contract is above a certain number. That's the case. That counts. Also, the total maximum score for this subfactor is 6 points for both small business and you and unrestricted. So even if all your QPs get 2 points, that should be 5 times 2, 10. You will not get more than 6 points from this subfactor. So consider that when you're calculating your score. Let's now discuss the third subfactor, integrated experience. Here you get 1 point per QP if 5 or more labor categories were used in the execution of your contract. Like, a clerk, an engineer, a manager, or so on and so forth, different LCATs. Or for that QP, if the scope of the contract covered 3 or more domains. Domain meaning one is human capital, but perhaps you did some administrative work. So business administrative work, that's another domain. Or you did, financial work as well. That's another domain. So if you can prove that the scope covered 3 or more domains, you get a point. Now, it's an or, so meaning that if a QP has both 5 or more LCATs and covers 3 or more domains, you don't get 2 points. You still get 1 point. And the maximum is 5 for small business and 4 for unrestricted. Okay. Fourth subfactor is management and staffing. So for each QP, you get 1 point for any of these features in your contract. The features are surge, and the definition of surge is increase of more than 10% of the value of the contract or the work that is done in less than 45 days of lead time. That's the definition of surge. So if your contract had surge, or if you use 3 or more subcontractors, 5 for unrestricted, 3 for actually small business, or if you use 5 or more personnel with clearance, and clearance means secret, top secret, SCI, and Q for DOE, Department of Energy. So any of these, you get a point. Now, one QP can get 3 points. It might have a surge, it might have 3 subcontractors, and people with clearance. That's fine. But at the end of the day, for the total 5 QPs that you bring to the table, the maximum score that you can get from this subfactor is 6, whether it's small or unrestricted. Okay. Now, the last subfactor is past performance. If all 5 contracts have a positive, that is above satisfactory, past performance rating shown by their CPAR, or if you get the JP6 form filled, you get the maximum 3 points. Now, if 4 out of 5 have above satisfactory rating, you get 2 points. If 3 have above satisfactory rating, you get 1 point, and below that, you don't get any points. A few important notes. You can use a JP6 form. It's like a PPQ, only and only if CPARS is not available. And you can't use a PPQ form, other types of PPQ. You must use that JP6 form that comes with the RFP. Also note that I said above satisfactory, that is the average of the CPAR ratings. But if it is equal to satisfactory, it's not acceptable. It has to be above that. I'm going to show you with an example on next slide. Finally, for the UNR track, if all 5 contracts had a very good or exceptional rating for small business utilization subfactor in the CPARs, you get 1 extra point. That's why for UNR, the total would be 4. Okay, now, question is, how do you know if your CPARs is above satisfactory? Because it has many subfactors. Usually, These are the sub-factors in a C power rating which are rated separately. Technical, or sometimes called quality of service, schedule, or sometimes called timeliness, cost control, management, or sometimes called business relations, and finally, small business subcontracting, if it's applicable. Now, the way you calculate your average score is that you give a point score to these ratings. Exceptional is 5, very good is 4, satisfactory is 3, marginal is 2, and unsatisfactory is 1. You replace these numbers for the ratings, add them up, and then divide by the number of applicable ones. If a rating is NA, you don't count that. So let's look at this example on the orange box. We have technical, which is exceptional. We put a 5 for it. We have schedule is satisfactory. We put a 3. Cost control is marginal. We put 2. Management is satisfactory. We put 3. And small business utilization is NA. So we don't count that. So to do the calculation, we add 5 to 3 to 2 to 3. That's 13. Divided by 4, not by 5, because small business utilization is NA, so we don't count that. So we divide that by 4, we get 3.25. Now, satisfactory is 3. So 3.25 is considered above satisfactory. So this example of ours is acceptable. This is how you actually check to see if your score is, your QP has a above satisfactory rating. Okay. There's one special case that I want to cover also. If you have a single award IDIQ or BPA, so single award, and it has to be a federal prime contract IDIQ or BPA. Okay. If you have that case and you're allowed to bunch up the task orders under it and present that as one contract, one of the 5 QPs. You can do this just once, so just one of your QPs can be like this. For example, consider the case of a single award IDIQ you have, whose task orders are all small, 100,000, 120,000, things like that. So each task order by itself cannot be used, because if you remember, I said the minimum task order, I'm talking annual value, obviously. The annual value must be 500K, but all of yours are 100,000 or 120,000, something like that. But what you can do is you can bunch up together 5 or 6 of these to get above 500K, bunch up the number of FTEs, bunch up the number of, for example, subcontractors and all other factors, and this way increase the score and consider it one contract. So if you have that sort of a single award IDIQ, you should consider using it, but just once. 1 out of the 5 QPs can be like that. Okay, so that was the first main score factor, the QP factor, and its subfactors. Let's now consider the second main factor, the FEP or Federal Experience Projects. There are 2 subfactors involved here. One is the number of task orders, and one is federal agencies. You can see that number of task orders, you get 4 points, and federal agencies, you get 1 point. Now let's look at each of them separately. So you get 1 point per task order that you have performed under an emphasis here, multiple award IDIQ, not single award, multiple award IDIQ or BPA, and you need to be prime on it too, and it has to be federal. The name stands for it, Federal Prime Experience. So a federal IDIQ or BPA, which is a multiple award. The maximum point is 4, meaning that you can have up to 4 different task orders, 1 point per each task order. Now, these can all be under one multiple award IDIQ or BPA, or under different ones. That doesn't matter. Also, these contracts don't need to be the same ones you used in the 5 QPs, 5 contracts you used for QP factor. They can be completely different. So the requirements are: firstly, they must be task orders under Prime Federal Services Multiple Award IDIQ or BPA. Secondly, they must have an annual value of over $250,000. Not $500K, $250,000. And it's the same for small business and unrestricted. Third requirement is that they have to abide to the recency requirement like QPs. ongoing for the past 6 months or completed within the past 5 years. Important thing to note, their scope doesn't have to be relevant to human capital domain. So maybe you did IT work, maybe you did business administration, maybe you did finance. That's fine. They're just looking for that 250K recency and being task order under multiple award IDIQ BPAs. That's it. Okay, second subfactor is about number of federal agencies you have worked with. If you can show that you have worked with 3 different agencies, you get 1 extra point. Work meaning you've got contracts, and these must be standalone or task orders with 3 requirements similar to the previous subfactor: federal prime contract, annual value over 250K, and 6 months of performance if ongoing or completed within the past 5 years. Now again, here you don't have to show relevance to the domain, to human capital, so they can be any contracts. And the contracts don't have to be the same ones you used in QPs or even for the task orders in FEPs. They can be 3 completely different contracts. Okay, so that was the second main factor, FEP. Now the third main factor is system certifications and clearances. And here you can see that graphically comparison of the 3 subfactors, the accounting system, the facility clearance, and other certifications. Now, for the sake of time, I will not go into the details of each, but the next 3 slides cover all the details, and then you can review them. So you can see that for small business, you get 2 points directly for accounting, if you have it or not. For unrestricted, you have to have, if you want to get 2 points, you have to have 3 of these that are listed here: accounting system, approved system, so on and so forth. Main thing here is that these need to be government approved, not third party approved. All of these, okay. For facility clearance, whether you have active, whether you have secret or top secret doesn't matter, but it has to be active. Pending doesn't count. You get 1 point. Now, for other certifications, they're listed from CMMI to different types of ISO to CMMC level 2. You get 2 points, 1 point for each. So if you have 2 of these, you get 2 points. That's it. So those were the cases. Now there's a special case for mentor-protege JVs I want to cover. If you're submitting as a mentor-protege JV, for QPs, at least 1 QP must come from the protege company. So you can't have a case that all 5 QPs come from the mentor. However, the minimum threshold annual value for each domain is halved when a protege submits a contract. For example, say for human capital services, small business, the minimum annual value for QPs was, as we mentioned, 500K. But if we are submitting as a mentor protege JV and the contract is coming from the protege, it doesn't have to be 500K. It can be above 250K, and it will receive the points. The same stands for the number of FTEs. If the number of FTEs is supposed to be 10 to get a point, if it's coming from the contract is coming from a protege and you have 5 FTEs, that's acceptable. You get the points. The same rule applies for FEP contracts. So, for example, for the TOs under multiple award IDIQs, if it's coming from the protege, it can be $125,000 instead of $250,000. Finally, these rules apply to the unrestricted submissions as well. So for a mentor protege JV submitting under a human capital services unrestricted, the annual value of the protege's contract doesn't have to be $1 million. It can be above 500K. So that's the good thing about submitting as mentor protege JV. But remember, 1 must come from the protege. So that was the scoring system for this domain. Let's now discuss eligibility assessment as well as score optimization. These are the first steps that you should take. If you have multiple contracts, use a tool to first profile your contracts and see what score each will bring for you, and then which 5 QPs to select to maximize your score. I'll show you our eligibility assessment tool on the next slide. To do that, you need to read the RFP and the Q&As, usually the previous Q&As and the latest RFP, documents for the original OASIS Plus carefully and fully understand the requirements for each score factor. You must create a table to score each score factor for each of your QPs. Then estimate your best score and do a gap analysis of where you're short. In doing that, focus on maximizing the score on the 5 qualifying projects and maximize the use of your commercial subcontract projects if possible. Now, following your gap analysis, decide on partnering and multiple partners, maybe, to boost your score. You should consider outsourcing the eligibility assessment to ensure you have a good chance of success. Now, this is a form we use to do eligibility assessment for our clients, and I'm going to give you the link for this service as well. It makes sure that you don't spend money on something that you don't have a chance on, and also ensures you know where your gaps are to bring on team partners. So for each contract, you have to, on the column on the right hand side, the yellow column is where you actually respond to them, the value, duration, whether you use 5 FTEs or not. So these are the specific questions that we have prepared that you have to answer to, and then based on that, this is another page. Now, based on the previous slides form, our tool creates this, which independently scores each contract. The 10 columns from the right and the graphical representation of the score below it, are produced from those the previous form that I showed you, and then it automatically picks the best 5 to maximize the score. So those columns that are green are the best 5. The orange column is the final best score you get for each scoring subfactor, with the total at the bottom. In this case, it's 44 out of 50, which is good. This is a small business submission. So this is specifically telling you, hey, you're good to go. You don't need a partner. You are a few points above the minimum threshold of 36. So everything is good. Maybe the total comes to, say, 32, in which case where this shows you where you're missing points and what partners to look for to actually get those points above 36. So we call this the eligibility assessment service that we're providing. And if you're interested in our eligibility assessment service, you can click on the offer tab on the right hand side panel to go to the link to read more on the service and request it if you want. Let's discuss substantiation now. Remember, the proposal you're supposed to provide is essentially the documents that prove your self-score is justifiable. These are the award document, perhaps, the statement of work, the SAO, the FPDS printouts of the contract. FPDS is the government website that has lists all the contracts. So it's considered official document when you have a printout of it. The CPARs, or the JP6 in lieu of CPAR, and the JP3 form if your contract's NAICS is not what it's supposed to be, or if you're a sub and want to prove relevance and other QP subfactor information. So you need to tag and highlight the relevant information on each piece of document. Let's see some example of this. So this is an example award document with relevant pieces of information highlighted and tagged as well. This is an FPDS printout, again with relevant pieces of information like contract number, dates, values, etc., highlighted and tagged. So this is how you get the documents. Now you can see that there are a lot of moving parts involved, so you need to know what documents you need to present to justify each point score. They're not necessarily just one document required per point score. So you need a checklist, sample here, for example, to ensure that nothing is missing. This is an example of a checklist for the 5 contracts that were selected for QPs are listed at the above under 3. Those are the 5 contracts, and below it are the documents that are needed. And when it's ticked, it means that it's ready and it's prepared. So for each of the score factors, you might need different documents, and they have to be tagged, highlighted, things like that. So a lot of document management work needs to be done. Okay, so that brings us to the importance of compliance in these self-scoring proposals. Due to shortage of time, I will not go into the slides about compliance. I just want to emphasize the importance of compliance. I've seen many companies, in fact, lose because of not paying enough attention to this and not paying the price for ensuring compliance when they're preparing their proposal. So please go through the slides that I have put in here and discuss it with your team when you are actually preparing your proposal. Now, with regards to price, there's always a question as to how price delay plays in the self-scoring proposal submission. The short answer is no score is given for price. They just check it to be within the acceptable range and complete for all items. That's it. A few points. You can refer to this slide later, but essentially you have to provide pricing for 20 LCATs at the SME subject matter expert level, and you want to make sure that you're not below the maximum you are below the maximum acceptable government rate. And that's all there is to it. They give you what is the maximum acceptable rate. You just want to make sure that you are below that. That's all there is to it. So it's very easy to prepare your price form. There's a form that comes with it. With the RFP, you just have to fill it out. Okay, teaming is extremely important in OASIS Plus. The short rule is if your own score cannot be above the threshold, use teaming, period. No indecision. In OASIS Plus, everything is about the score. Whether you get your score all by yourself or you have a team of 5 subs, for example, the government doesn't care. At the end of the day, the score is the king. Now, some key points here. I will not go into the details of all of them, but essentially, I recommend, or we recommend as our company, that if you're not 3 to 5 points above the threshold, so this is new. If you're not 3 to 5 points above the threshold, consider using a partner. You need those cushion points, those 3 to 5 points. For JVs, MPJVs, prime sub relationships, all are acceptable. You can use the partners contracts for QPs and FEPs, which account for nearly 90% of the total score. One important factor is that if you're a small business, your subcontractors must also be small under that particular domain. You can read the rest of these points that I've listed here later on when you refer back to it. And we have a free partnering portal. You can see the link here. I'll put it up on the chat as well. So you can actually register here, go find your partner, whether you want to be prime or sub, and this way you can actually communicate with them and reach an agreement and work from there. So this is a free partnering portal. We've already, I think 400 companies registered and got together during the previous OASIS Plus submission. So this is something very helpful. Okay, and this is the first page of that site. Let's now discuss strategy and share some experience. So this is perhaps the most important opportunity for many businesses for the next 10 years, or I should say 8 years. There is no competition, so use all means possible to win a seat, including partnering with other companies, either as prime or as a sub. Expand on domains. If you have past performance in any domains other than your main domain, but not the required 5 QPs, don't relent. Use partners and expand your grasp by going after multiple domains. This holds true for both small business and unrestricted tracks. For small businesses, don't stick to just your own set-aside track. First of all, you should also go for the total small business track. It's considered separate from 8A HubZone WOSB and STV OSB. It's a complete track. And secondly, if you have strong QPs, by all means go for the unrestricted track as well. Say you're sure that you get above 42, why not go for unrestricted as well? At the same time, don't be overconfident. Self-scoring proposals are all about analytical thinking. Good writing skills, which is the key strength of us proposal managers, is of no help here. You need to have good analytical thinking capabilities and good document management. Now, outsource if you have not done this before. Even if you have, get your proposal reviewed by an outside source. I've seen many companies lose because of not doing that. Now, focus on your QPs. They are the driving factor. I think I've shown that in different ways to you. First, do an eligibility assessment to understand your gaps and the need for teaming. Maximize your score. Use a per contract scoring system to see what your score looks like. If below the threshold, that's 36 for small business, 42 for unrestricted, select a partner as soon as possible. Companies are already teaming up, so you need to hurry. Ensure that you have 4 to 5 question points, as I mentioned previously, even if you have to partners to get them. Maximize the use of your subcontracts and or commercial contracts, if you have any. There's no difference. You get the points and that's it. Check compliance, think compliance, and eat compliance. It's really important. Don't lose time. Time is of essence. You don't want to miss the 2026 task orders. So start yesterday, start as soon as possible. And here I wanted to share our experience in terms of the time and resources needed for the preparation and submission of the OASIS Plus proposal. There are essentially 4 main phases. There is a phase 0 eligibility assessment if you're unsure about moving forward, but there are 4 main phases. Phase 1, contract selection and score optimization. Phase 2, preparation of the proposal documents. That's essentially the proposal preparation, or we call it substantiation. Phase 3, compliance reviews. It's a phase by itself, important. And then phase 4, uploading to Symphony. Symphony is the government's portal. Don't underestimate this. It usually takes 2 or 3 days. It's not a copy paste. So the graphical representation of the time and resources for each phase is shown also. So you can see that 50% of the time is spent in phase 1, contract selection and score optimization. This is the average we have found preparing over 200 OASIS Plus and other self-scoring proposals. So I just wanted to share this with you as well. So how can we help you on OASIS Plus? Here are the services we have. We have free consultation. Just we set up time to call and we discuss, answer any questions you have. Free partnering hub, which I showed you, and you can go to the website and register and then start finding teaming partners. Pre-qualification assessment. Again, I gave you the link, $490, so that you don't spend money on something that you don't have the minimum capabilities. Also, it gives you where your gaps are, so you know how to partner with others. Full proposal development with dedicated proposal team. So we do scoring, assessment, optimization, full proposal assembly, cradle to grave. Everything is on us. Full and multiple compliance checks, uploading to Symphony. All of this is on us. We are different from other companies. Some companies just give you consultation. That's not how we work. We don't give consultation. We take the responsibility, because at the end of the day, we want you to win. It's good for us. Our win rate is good for you. You don't lose your money and you get awarded. So we take the whole, heavyweight and work, and you just provide us with the documents. We do everything else for you. And finally, for those of you who have in-house teams, we do reviewing and auditing. So we do 2 rounds of compliance checks and score optimization checks, and we also help and audit uploading to Symphony for you. So these are the services we provide. Here are contact information, myself, email and phone number, and my colleague Maron Freedy. So if you have any sales inquiries or you want to set up calls, just contact Maron. Email is usually better for both of us. Technical questions for me, and consulting and sales inquiries for Maron, and we can set up calls, jump on them and discuss any of your needs or answer any questions you might have. Okay, so as usual, I'm short of time to answer all the questions, and I can see there are quite a few. So let's quickly answer some. Question from Marwan. How is pricing presented? Do we have to provide justification? So there's a form that comes with the RFP. It has room for 20 LCAS for which you need to provide pricing. Now, only in the case that your pricing is above the government's acceptable range do you need to provide any justification. Also, if you have government-approved forward pricing or other types of approved rates, then you must use those and present the approval letters. Otherwise, you don't need any justification. Question from Mary. Can we be part of multiple teams? I have 2 companies who have approached me. Yes, you can be in as many teams as you like, but there is an important point that you have to consider, and all these those of you who are primes and are looking for partners, you should consider that too. Now, say you are working with company A and company B, both of them are primes, and you are the sub. If company A is going for the same domain and same track as company B, then you cannot lend them the same contract. This is important. If you're prime, let me switch it the other way. If you're prime and have subs, make sure that your subs are aware of these limitations and ensure they're not using their contracts for the same domain and same track with other primes. Note, I said same domain and with an underline, same track. So if a domain is different or the track is different, you're good to go. There's no problem. So if you're a sub, you lend the contract to prime A for human capital domain for 8A submission, and lend the same contract to prime B for human capital domain, not the same domain, but for hub zone submission, there's no problem. You have a problem if both of them are going for hub zone or both of them are going for 8A. That's the thing you have to be aware of. Otherwise, both will be disqualified. Question from Gregory. Can we use subs to increase our score in the systems and certifications area? No, Gregory. Only for QPs and FEPs can you use subs. You can use JV members. So if JV members have either JV members or how many there are, any of them have those systems and certifications, it is allowed. But if you have a prime sub relationship, you cannot use them for systems and certifications. Question from Susan. We are already on HCATs. Do we need to be on OASIS Plus as well? Yes, as I mentioned, they're not going to continue and extend HCATs. So all those who are currently on HCATs should bid for and get on OASIS Plus now. And it's not an automatic process. So you have to actually submit your proposals and have the minimum requirements to get on OASIS Plus. So they're not going to transfer you automatically to that. Question from Stan. We are a large business and would like to go for multiple domains. How is the contract selection done for multiple domains? Do we still have to provide 5 contracts? You need to provide separate proposals for each domain. Hence, you need 5 contracts for each domain you're targeting. Now, I've seen cases in which the same contract has been used in multiple domains. But still, as far as submitting for each domain, you need to have 5 contracts. Okay, this one is sales related. Actually, there are quite a few questions about sales and services. Those I will communicate with you directly, but yes, as I mentioned, we can support you fully and prepare your proposal. Question from Nancy. Do we have to have separate contracts for multiple tracks on the same domain or not? No, you don't need that. For a domain, once you find out which 5 QPs will give you the highest score, you can use them for submission towards multiple tracks for that same domain. Although you still have to prepare and submit separate proposals. So separate proposal for each track, separate proposal for each domain. Okay, we are out of time, so I would like to first apologize for not being able to answer all your questions. I will certainly respond by email. Also, thank you for participating in our webinar. I look forward to seeing you in our future webinars as well. Have a wonderful day.